Audio check, audio check. Ladies and gentlemen, Pedro and I will be with you shortly. Audio check number 2, ladies and gentlemen. Check, check, check. 1, 2, 1, 2. The DYOR live show starting shortly. Good morning, ladies and gentlemen. Welcome to the show here. Pedro and I are just getting things started, getting the server serving, getting the video the video crypto lifer was on this TV. He's not on the show here. He was just watching one of his videos. Getting the electrons excited up into a higher orbit to go from my and Pedro's camera to your monitors. That's right, all the way across the world, all those great countries you guys watch us from. Anyway, good morning, good afternoon, good evening, everybody. Welcome to DYOR Live. My name is Tom, otherwise known as Striking, here in the digital media universe. So glad to be hosting another great show on this great network. Ladies and gentlemen, the host next to me is Pedro Garcia, the crypto chart analyst, getting ready to bring you Technical Tuesday. That's right, ladies and gentlemen, it is June 17th, 2025. The S&P and NASDAQ fall on war news, but not that much. Market is anticipating all this kind of business in the Middle East for, say, 70 years. Bitcoin dumps, though, as predicted. It's not really a dump. It's just a move into the liquidity. And, of course, ladies and gentlemen, it's Technical Tuesday. Want to know how your bags do as a result of the World The world's economic indicators? Well, Pedro's going to tell you today. Pedro, what's happening?
Not much, man. How you guys doing today? Hey, dude, we've got a nice little crowd over there. I'm already noticing. Nice, nice.
Whoop, whoop, as Pedro would say.
Yep, yep. We've got some good stuff though today. I'm kind of excited. Please hit the like button, share button. I'm gonna go over some dope stuff I think you guys will like. We're gonna go over housing. We're gonna go over bonds. And you're like, that is not sexy. That is boring. I want to hear about crypto. Well, guess what? Because institutions are involved now and they're buying and selling crypto, it's now all involved. So Bitcoin is tied to, guess what? Interest rates, as well as the S&P 500 and all that correlating. And so you now kind of need to understand this stuff from a macro standpoint, charting macro standpoint, so you can understand what we're looking at and potential moves that we can expect. I've been talking about a drop here in the market for a while. We kind of come back up and tested the tops, but I just don't feel this big push up. Like I said, I wanted to see more volume over coming in, and we're just not seeing that. And so you can see some parts, and we're not there yet. I mean, I know I'm not sure.
Sorry, Pedro, I got it stuck. You stuck on the solo screen here. I'm relaunching my switcher software because it decided to just freeze with you on that screen.
Okay, that's all right. So
everyone enjoy Pedro's face. There we go.
There we go. So I think one of the things I want to add here, because I think it's super important to understand, is that as we're really moving into this stage here, now I've heard a lot of, financial guys, economists, as well as, people who put their money on the line, billions of dollars, hundreds of millions, billions of dollars, who do say that they think that crypto is a bubble and that it's going to go down, but they're still long, right? Because there's money to be made. And part of me believes that just a little, but because the way I look at things is a little bit different. A lot of times you can believe in something, or at least want to take part in it and not believe in it. I believe in crypto because of just the fundamental analysis of the fact that you can't make more Bitcoin. And we talked about that yesterday, kind of a little bit ad nauseum. And because of that, I feel as if this is one of the things that I don't think a lot of these guys who are investing into crypto, but they look at it as a stagnant asset that doesn't produce anything. And to me, I see a bit of a difference behind it. The blockchain itself is a system that you can pull apart from crypto, but it is almost like, it's like somebody who has an artificial leg, right? It's you can walk without it and you can be okay if you have crutches, but right now the current system is messed up in a way where it's broken. It has a broken leg, and so I feel like crypto is going to be that supplement to help people. And so
and you're going to learn all about it on Technical Tuesday. And for the laymen out there who are not traders or really understanding how the world works, even if you're not going to use the information that Pedro and I go over today, to kind of pay attention to your portfolio, you'll understand the news better. You'll just be able to tell what's going on in the world better if you know what that means when the Fed lowers or raises rates. When the news says, "Oh my God, bond yields are going up," the guy might have a negative intonation when he says that. Sometimes the bond yields going up is good, and so dollar's falling, and people are out in the streets right now saying, before Trump was in office, the dollar was stronger, and now we're weak, and blah, blah, blah. And I was like, well, it's good. It's good that the dollars came out. It was too strong, and our exports were too expensive, and it was killing our trade deficit. And they're like, how can you say a weak dollar's good? You're a trader. And I'm like, see, you don't understand. And so hopefully you people will, I shouldn't even say you people, I can't say that. Hopefully you viewers will take a little bit of this information and learn a little bit more, and that's why we're called the DYOR Media Network. And Pedro, that stare does not work. Let me tell you that. All it does, it does freak me out.
What are you talking about?
You're doing that staring thing again that you're talking about with the dopamine hit.
Oh, yeah. No, I wasn't even.
And I'm looking at your I'm looking at your picture on the screen like this.
No, it's not even that. I was just listening to you. I
was thinking you're gonna get the knife out and do the Jason kill.
No, no. That is something totally different, and that is more flirty. That was me just listening.
Oh great! So you're gay?
No. What's wrong with being gay, dog?
Nothing wrong with that. Nothing wrong with that. I support Pride Month.
Shoot. Now I'm not. I'm straight. My friend was. You were joking out.
This is turning into a Dave Chappelle show, ladies and gentlemen.
Dog, for real. It's like, anyways, but I have the when my face is resting, I've got the a-hole face, right? So I forget. I was literally, dude. I went to beauty school, dog, right? And I'm sitting there working on this mannequin, dog, and I'm like sitting there like, and so this girl, this one of the, they call it, what do they call them? One of the teachers who walks the floor and make sure everybody's doing good, and if you have questions you can ask them. They come over and help you. So she comes over to me, she goes, Pedro, listen, if you need to talk, you can talk to me, it's okay. And I look and I'm like, no, I'm good. She goes, no, you don't need to be like this strong masculine man, it's okay to talk. And I look at her, I go, what's the deal? What is this all about? Like, what are you asking? She goes, I can see you're really upset. I mean, like, almost you're ready to murder somebody. And I go, oh no, that's my concentration face.
my bitch resting face.
Yeah, that's my concentration face.
Resting bitch face.
What? And so she goes, what do you mean? And I go, you know how you have the resting? I go, yeah, that's my resting, want to stab you in the throat, mass murderer. And face. And I actually learned that from my pastor. I had just started going to Mars Hill Church. It's a church up in Seattle. And one of the guys was like, you gotta learn to smile more, bro. And then I go, well, I'm happy. And he goes, no, I know you happy, but you gotta learn how to smile, my dog. Like, for real. Like, and I was like, all right. He goes, not like that. Like, normal chill smile. And I said, okay, cool. Like, what's the deal? And then she came up to me around the same period and goes, do you need, like, what's going on? So I said, man, I gotta be mindful of my concentration face.
All right, ladies and gentlemen, that's, like I said, that's the entertainment you get here. But fortunately, ladies and gentlemen, today is what, Pedro? It is All right, ladies and gentlemen, it's Technical Tuesday here. We go over the world in general, which isn't a dumpster fire as it is right now, but the markets are taking it in stride, not dumping out more than one would expect. As everyone expects that's actually in the market, they know that the markets price these things in well advance when they're known. And everybody knew that Israel and Iran were going to be rattling their sabers. And frankly, just shooting missiles at each other like backyard kids throwing sand at each other doesn't really move the markets that much. But if troops start moving and planes start moving and stuff like that, then there'll be a bigger move. Although I did, like half of the U.S.'s fleet of aerial refueling tankers all left the U.S. at once yesterday at one time, and it was had the flight-aware crew going nuts. People are like, "Oh shit." All of a sudden, you hear this rhetoric coming out of Iran, like, well, we might be a little bit more peaceful than you think. Anyway, the world's coming to us in many different ways. One of them is via our pockets. Pedro, what's going on?
Awesome. All right, so let's go into this stuff because we've got some dope stuff. So let's go over the world stock market. It's basically a conglomeration of all the largest stocks in the world and bring them together. Or I think it's just all the stocks in the world, which is roughly, I think, around 5,000-ish, like major stuff. And so this is what the URTH is. It's a ETA that kind of tracks all of them. And you can see we've been talking about a pullback for a while off of this. And so I know that the stock market is at almost its all-time high. And one of the things we always mention here on our channel is if the market goes up in the beginning, always expect it to come back down if it goes up the beginning of the week on Monday or Tuesday, expected to come down on potentially, Thursday and Friday. It's one of those things that it's kind of like what I talk about, and we've seen this now multiple times here throughout the week. Smart Money Principles also talks about this as well. So if you follow him, any trader typically over a period of years, when you're in the market, you realize this is just a natural pattern that happens. So let's pull this up here real quick. So since we've seen this market at the beginning of 2025, we saw it rally up, come back down. We heard the tariff woes of everything happening. And then we saw a big explosion from the bottoms of April at the beginning of April, we found the bottom, and then we've gone up here. Now, one of the things I want to bring in is that I have a hard time with this huge rally here in the market, literally just simply because I don't feel it's warranted. We have housing markets we're seeing a slowdown in the housing market here in America, as well as a slowdown in hours and jobs. And so these aren't necessarily a good thing, which will bode well for the economy at large, which causes the market to go up. So I think a lot of it is for lack of a better word, seems like
Bubble?
a rope-a-dope situation that basically the institutions wanting to put in their shorts, as well as it's going up, so they're net equal or net positive right now, simply because you can put a long and short at the same time, and your P&L just stays stagnant, right? And then as you're moving up, you basically put in both positions until you get to the point where you really run out of novices buying. And then within the last few weeks to maybe a month and a half, they just sell off their positions to you, and then the market just drops. And so back here, when we were talking about this, it was very much a similar thing. Before the talk of tariffs really came to fruition, we saw a drop in the market when it came to volume. As you can see, kind of went like this. And it's kind of what we're seeing right now again, right? We're seeing this market push up again right here, right? But yet we're seeing volume just kind of de-escalate and kind of drop down here. And so this is kind of like what I'm expecting on a global standpoint. A lot of the world pays attention to the US housing, to our retail sales, and we're seeing now just a slowdown of people buying in the stores. We're just seeing a slowdown of people buying in stores. We're seeing people slow down buying houses, right? We talked about this about a month ago, how people, when they buy houses, they have to furnish those houses. And so when they furnish those houses, they go out and what do? They
go to IKEA.
Exactly. Well, rest in peace, IKEA. Warming out for the homie. But they go to Home Depot, they go to IKEA or places like that where they can pick up. I mean, and the fact that you saw IKEA go basically bankrupt was one of those things.
IKEA went bankrupt?
Yeah, we talked about that on the show, bro. Yeah, pull it up, watch.
Like IKEA US or the IKEA corporate in Sweden?
Maybe, give me a second. Maybe IKEA. Did IKEA go?
Man, the line outside the store here in Ottawa is,
IKEA has not gone insolvent, but it has faced legal issues, including a $24 million settlement related to consumer privacy.
Wow, $24 million is nothing.
This settlement does
each store makes $24 million in an hour.
I thought they went belly up. Maybe I'm wrong. I thought that they.
I haven't heard that them going big. You just put their stock chart up, you can see it.
I thought they went belly up. Okay, pardon me. Well, I know that their numbers are definitely going down, and they have been looking to close down stores. So forgive me for that incorrect statement. But the fact is that we are seeing a drop in IKEA. We're seeing a lot of these stores, these companies that typically indicate that, hey, people are doing a lot of stuff with buying houses and filling it, we're seeing it drop. So there's these indicators that are kind of showing us that we are seeing a slowdown in the economy, i.e. also a slowdown in hours being given to people, and jobs themselves have been slowing down. So we've got a lot of stuff going on here that I want to kind of prepare you guys for. So when you guys see some of the stuff that's happening here, you won't get thrown off. Now, we're already seeing that the world stock market is slowing down here. We're seeing a slowdown in volume. We're also seeing us get below that 200 period moving average, or excuse me, not 200. We're getting below the 8 period, and now we're starting to tap on the 20 period daily moving average. And we're seeing it kind of come together here, which typically indicates that we're seeing a rollover here. And so you can see here, when you start to see that 20 and that 8 do that, we'll get a crossover. Now, one of the indications that I look at, as you all know, is these right here. We look at wicks. And so these wicks will indicate to me typically that we're starting to see sellers are stepping into the world's economy and looking to sell. And so for me, this is an indication of, hey, we're seeing weakness starting to come into the actual market, into the stock market. And we're seeing now people start to kind of put their money in, or starting to pull their money out, or put their money into shorts. And so I'm looking for a pullback on this from the 164 area to the 161 area. It's going to probably be a 2-3% pullback, potentially. But if we start to pick up steam, we've got some levels here that are pretty significant. That here is that 157 from the 160. So that basically would be about a 10% pullback potentially from the highs here, or 10 points. So that would be about a 5% pullback. But apart from this, if this thing starts to pick up steam, the next level here that if you can sit there and see here is really down at this level here. And that's really kind of at this, I mean, we've literally traded through all of this, is down at that 130 mark area. And so that potentially could be a...
What is that big wick there?
This is
the tariff wick?
This is the tariff. Yep, this is the tariff.
That was the best buying opportunity in the history of NASDAQ and the stock market. I mean, it just...
Yeah.
I mean, short-term buying, you know, it went down to... What did it go down to? 14,000 the NASDAQ or something? 14.9?
Yeah, it did. Yeah.
Now it's 22?
Yep. But we're going to go into that in just a second here. But ultimately, you can see here that this is the world's ETF. This, this is pretty much all of the stocks that are significant. And you can see here that I'm expecting to see we topped off from the previous highs. You can see right here. And now it's starting to turn around. So I'm expecting, again, a retest of that 132 area here. And so, because again, there's nothing else until we get where we look at liquidity, and that's this level here. So for me, I would expect us to come back down and test this here, which would significantly be and this, again, this is a 20% pullback. Okay, so this is not just a pullback. This is a retracement. This is what did they say? Anything above, what is it, 10%, or anything around 10% is a, anyways, I forget. It doesn't even really matter. The reality is it's coming back down to, I think we're coming back down to here. And so I want you guys to kind of be prepared. And the primary, and you're like, well, what's your data, Pedro? Well, we're going to go over that in the housing market and see what's actually going on here so that you guys are prepared for it in case it does happen. Again, let's go into the ES now, or the S&P 500 here. S&P 500 here has been basically, I mean, we just saw it go almost to an all-time high at the April sell-offs here, which is around the 4,800. We came and tapped our areas here. We can sit there and pull it. Came down, hit our area, boom, bounced up, played around, and then we saw it continue up. So I'm expecting, again, another major pullback from what's happening in the housing market. potential, and this is all predicated on if we go into a recession. If we go into a recession, this is what I expect to see, what's going to happen. Again, I don't believe this is based off of the tariffs. This is still the market structure that we had during 2020 or 2019, and then in 2021 when Biden stepped in. Like these have been something that has been plaguing us for a while now, but we keep doing things to stave off the hurt, right? Whether that's lowering interest rates, whether that is, but from a fundamental standpoint, we are watching this happen. We've been talking about China imploding now. I mean, since almost the start of our show, literally because of what's happening within their economy and how.
I find the things we talk about long term tend to come to fruition. I mean, at any moment you're about to see bad news out of China. Like they've given it as much credit, and they don't have enough foreign reserves, or even though they have a lot to handle just their real estate market, and then their stock market implodes, and then they have real trouble.
Well, they had the bazooka stimulus package that they talked about, like this thing's going to be really good 8 months ago, and yet it still hasn't. I mean, it hasn't done much. It was like boop, right? Like it wasn't like they thought it was going to be this type of thing, and then keep them going, right? And stave off the whole entire fundamental ideology of their real estate bubble that they currently had get going. I mean, the fact that the loss of the Garden and the other one, there was two primary property and real estate companies that really were significant in China's economy, and it was something Garden and
whatever, it doesn't matter.
Yeah, but these were primary.
It's like Evergreen or something like that.
There you go. It was Evergreen and some. What were
the names don't matter. Just
you're right.
Keep rolling with your thought.
Yeah, but because of that circumstance, and we saw what was happening, right? This is where the bazooka stimulus package came in from China. Banks in China are still not wanting to lend. We're watching that happen right now with a lot of our inside people that are there. They're basically, I mean, it's going to come to the point where the draconian nation or leadership there for China is going to come in and say you have to lend, and then everything's going to fall apart. It's almost going to be almost in the same circumstance that California is saying, hey, if you have crypto in your wallet, you need to use it. If you have longer than 2 years, they're trying to pass these laws there to make sure to stave off a complete implosion of what's happening in California. Same idea, similar to what we're seeing in China. But I think they're going to push people too far, and then people are going to be like, dude, we're done with you. And so this is where I think we're going to see happen. And if that happens, the manufacturing situation will kind of fall apart. We talked about that yesterday. But ultimately, what I expect, though, is that as America is slowing down, the rest of the world slows down. Everybody, excuse me. All right, sorry about that. So because of what we're seeing with the slowdown of America, the rest of the world knows that there's going to be a slowdown. They basically feed off of us. I hate to say, but America has a big tit. So it allows everybody else to feed off of. And as we slow down, it's going to mess with things, as well as Trump's situations will actually put America in really good standings as we come out of this out of this recession. Potentially, I really do think we're going to get into recession. I really do. People have said no, we're not, and there's this definition of what recession is, but I think we're already in it. But it's going to steepen here as we start to see a slowdown in jobs, hours, and we're already starting to see it in relationship to the housing market. So with that said, you can see here that we're already starting to top out. You can see here that, look, we see this huge rally up, but look, we're seeing a decrease in volume. And now that even at the top end here, you can see we've seen out of the few weeks, you can see the real volume coming in recently at the top here, which are the seller volume. So that's why I'm hinting I expect us to see kind of turn around here. So when we sit there and we look at it like from a large term, there are going to be a few bounces I don't want you to sit there and get stuck on, thinking, oh, we're going to the moon. One being the weekly 8 period coming back down to that 58 area, and as well as the 54.40 area here. These levels here are most likely going to act as push-ups for you, because that's where the liquidity is sitting. So I'm looking at that 54.34 area on the S&P 500. Be ready, and that's really at the 89 and 100 day period moving average. You can see how it will hit it, bounce back up, and then see it kind of rally from there until we see again another leg down. But this is kind of like what I'm expecting with the S&P 500. Let's check out the NASDAQ here. Nazi. NQ, or where is the NASDAQ? Boom, NASDAQ, here we are, boom. So you can see here on the NASDAQ, we marked out this area here as a supply area. This, I believe, is the weekly area here. And so we can see here, we've been playing off, we've left this here. This was the original one where we saw the sell-off and came down to our area here, and then it bounced back up. The next area, as you can see here, again, is showing weakness, right? You can see this here because you can see a slowdown in the market as it's starting to continue. And a similar situation with the moving averages. We're showing weakness. So when you look at the futures here, as you can see here, is showing, again, when we look at the volume, you can see here that the futures it's starting to decrease. As we're moving up, we're seeing a decrease in volume right here. And so this level here kind of shows me that we should see a pullback down to our levels, that 20,000 and most likely that 18,000 area for the NASDAQ, right? And again, I don't want you to go out right now and just go short, right? The market needs to prove this. So we could put in a all-time high here at this level and then see a turnaround, right? Because again, what's at the all-time high? Stops, right? And so those stops will act as liquidity to see the market turn around. So we want to make sure that the market proves to us that it's going to go down here. So we'll see, we'll be playing this market and pay close attention to it. Now, one of the things I always talk about is the Russell. We talked about this a couple weeks ago, how the Russell was basically showing weakness again. Even though we're moving up, we can see here that we see a decrease in volume. What's going on, dude? You just gave me the what sound.
No,
that's not
no, I want the Russell to go up.
Oh, yeah. No. Okay. So, yeah, the Russell will most likely start to go down here. We're hitting that 200 period moving average here. If we start to see jobs come in and start to see things populate, that will change the story. But the reality is this right here, that 200 period acted as resistance, and now we're starting to see this thing go down. My goal, again, I hope I'm wrong. I really do hope I'm 100% wrong with this stuff. Like, I'm serious. But I want to prepare everybody here so you guys have an understanding of what's going on in the market. Okay, so you can see again here a decrease in volume, and then we saw this a sell-off here on the Russell with an increase of volume starting to step in. And so with this, I'm expecting to see it kind of come back down and test these lows again that we talked about. So you can see here. Now let's check out.
Well, hold on. I got a question for you, Pedro, on the Russell. Since small businesses, let me rephrase that. I'm not going to say it like it's a true thing. I'm going to ask a question, but it's going to sound like a statement. Since small businesses usually have fewer resources, meaning cash reserves, than large businesses, they would seem to me to lay off people first. So in other words, a reduction in money going to small businesses, the smaller firms of the country, would indicate unemployment rising or a recession happening, because it seems like the Russell index would be the canary in the coal mine. Absolutely. It's like, would that be an accurate way to describe it?
That's exactly a great way of putting it. And that's how we look at it. People who are kind of chartists, who look at it from a macro standpoint, see the Russell, as you said, as a canary in the coal mine. Yeah.
Do I have Russell spelled correctly up here?
Let me look at this here real quick. Russell. Yeah. Yep. Yeah.
For some, I had it up there. I'm like,
one L. It's one L.
One L.
Yeah. RU.
I was like, it didn't look right, but my spell checker usually catches me.
Yeah, that's all good. Russell 2000. So this is one of those things that for many people, as we're coming into this market, the biggest thing is to just kind of pay attention here. If we really start to see at this high here, right? Again, I want to point this out, right? This was in April here, right? We saw the sell-off here. Here was the market where we at the beginning where we saw the sell-off. So we're roughly around the same area here. But again, there are a lot of stops sitting right here. And you can see we stopped all these people out, and now they picked up liquidity and potentially could be dropping it here. So that's where I just want to be mindful of what we're seeing here, and what we're expecting in the near future here. Now, again, if you're looking to trade some of this, you could trade this by playing off of that 8-period moving average as it starts to turn over on the 8-period and 20-period cross. Your 20-period would be, it's this type of circumstance that I am looking towards. So you see how you had a jumble of all the moving averages, and then you see right here, it dropped, came back up, tested, and then we saw the sell-off right here. And so you want to play it above if you want to stay short below, you want to stay short below that 8-period and wait for pullbacks to the Russell. You can see here, we're starting to do this. If you look right here, it's a similar picture here. You can see that, right? You can see the 8 and the 20 sitting right here. You can see the 100-period sitting. So you can see how it's starting to show weakness. So it's just these small little things you just got to be paying attention to, and then it kind of communicates the large term of what we're seeing. Now, the other part to be paying attention to now is the bonds. Now, like we talked about, this week Powell is going to be speaking. I believe he's going to speak somewhat on the on interest rates. Interest rates will determine whether people really start to buy, right, housing. If there's going to be two big things. If we see a drop in interest rates, that should bode where we see an increase in bond prices, right? Also, in addition to that, we also should expect to see people buy houses. Now, this could change the whole entire narrative of it, right? And the people who have been saving up, they might start to buy. I don't think that's going to happen, primarily because we actually have two primary things happening, right? Small businesses are slowing down. They don't have, they've been keeping people on, but just decreasing the hours in which they give them. Instead of 40, they give them 35 hours, 32 hours, right? So that they can keep really key, hardworking employees on. We saw back in, 2019 a huge layoff, right, and they lost a lot of these key people, especially during 2019 when or during Savasa sickness. Again, they let these people go because they were closed down, and so these people didn't necessarily come back, or maybe later came back to that job. So most businesses, small businesses, really rely on hardworking individuals that are strong, that are willing to act as good leaders in their organization. They're trying to keep these people, and there are a lot of people who are probably listening to who feel what I'm saying, like, yeah, my boss wants to keep me because I'm a hard worker. So these are those things I want to bring to mind here for most, is that we could see a downfall here. So you could potentially pick up on income here by literally looking to short this market if we start to see a sell-off, much like how we see back in the day when the futures, oh shoot, I forgot to do that. Give me 1 second.
Ladies and gentlemen, while Pedro's spinning back the reels in his brain there, thank you to everybody watching us on Rumble. We've got a good crowd over there of 12 people watching us right now. YouTube, our YouTube algorithm friend is not doing so well. Something changed in the algorithm. So everyone that is watching us on YouTube, we need you to share it. Hit that like button, hit that share button. You feel free to send us all your money if you want through Super Chats. That always helps. But also on Twitch. Twitch, we also have a couple of people watching us. Thank you very much to you Twitchers. Feel free. I don't have the Twitch comment machine going, so I can't tell if anyone said anything over there. And then, of course, X. Welcome to X viewers there. Really, really appreciate that. But like I said, our show is an interactive show. Even though Pedro goes on about the world's economic indicators, feel free to ask a question. And interrupt him like I do to get clarity on things. Even though I listen to this man in my ear every Tuesday talk about this, I still have questions about it because it's big and it's vast. The economic indicators are not simple things, and they have many different effects. And some days going up is good. Some days going down is good. Depends. And I'm not talking about the underpants that Pedro needs to get through a whole show. Our newest Rumble ad, depends. Pedro, I did, on that note, I turned on, like I say, I like to watch different news channels. And I was watching Fox News the other day, and I said, all right, I need to get the CNN version of this. And the CNN commercials in the evening are so horrible. Everyone is geriatric. Men that can't have sex right, can't pee right, can't poop right, heart doesn't beat right, brain doesn't think right. And there's all sorts of drugs and devices for each one. There's even a device to put your sock on for you. Have you seen that one? Can't bend over to put your sock on? You need sock on it. Or whatever the hell it's called. And then I was like, all right, I just wasn't paying attention on Fox. So I switched back, and the ads were different. They were different. This is TV, not the web where they feed you personalized ads. Thought I would enlighten the crowd with that entertainment there and interject, as they say.
That is so good, dude. That is so good. I love it. That is. It's funny, I think, at least to me, is that we all, as we get older, right? I pray, but I'm doing all these things to make sure that I don't have those issues, right? All right, cool. Or at least to mitigate as much as possible, right, of those issues, because it's like eating well, working out, staying healthy, losing fat, which me and Tom were talking about. And so I just think it's funny that, because the people who really listen to CNN is really just the older crowd. I mean, I don't ever hear a kid when I talk to kids, 19, 20, 22. I was talking to a 27-year-old, and he was saying, oh, I was listening to this podcast talking about this, right? And then he talked about an independent news source. I was like, who are they? And he's like, oh man, I love these guys, dude. They talk about this. And anyways, they don't pay attention to CNN.
Right.
CNN is not even in their.
Yeah, Striking Jr. doesn't. He sends me all sorts of news things. Not one of them is from a mainstream news media thing. Not a single one.
And when you talk to them, why don't you, I mean, I don't like them 100%, but I think Bloomberg is a good. And they're like, what's Bloomberg? I got to pay for that? It's really it. It's I have to pay for that? No, I'm not going to do that.
It's I'll gladly watch 10 minutes of ads to get it, but I'm not going to pay for that shit.
It's really, it's the funniest thing. I was like, well, yeah, because I mean, they're a good source of business information. And anyways, so I just thought it was really interesting just looking at it. Anyways, jumping back to what we were saying here. One of the things I think what I really want to add on is, and I don't want to paint a doom and gloom situation here. This is just, I think, a pullback that we're going a back to an area where we're going to be able to buy in again at a good level again, right? So if you feel like you've missed out here on this rally, I want to assure you, most likely, I'm 90%. I wouldn't be so strongly talking about this if I didn't feel as if this was something that really needed to be talked about. Because again, I think that we are going to see some turbulence come into the market, and it's not a bad thing. It will act as a good thing, because again, that will give the younger generation an ability to be able to buy. So I don't know. We'll go into that stuff here. Give me 1 second. Run back about close. There we go. Highlight. It's funny. I have all these friends who highlight, and I never highlight something. Highlight. Let's see if this will work. Boom. Highlight. Come. Watch the charts. Sorry about that, my peoples. I will jump right back in here in just a second. So the next area here that I'm looking at, I think it's really important to pay attention to, is really this area here. As we start to pull back, kind of expect to see a turnaround on the Russell here. As that happens again, just like right here, when we saw the turnaround happen here, expected to see it kind of come down first, right? We'll see it come down first into it. So it looks something like this. This is this part of coming up and then coming down, right? Came up, came down, came up, came down. Right? I expect something of this nature here, where we're going to see come up, come down, come up, boom, and then start to come down, come back up again, and see it do that. I think this would be a prolonged 6-month sell-off here until we really get things going within the market. I don't feel as if the techs, and we're going to go over this here, because to go over, the next part we want to go over is literally the bonds as well as stocks. So we're going to go into stocks first and then go into bonds. So if you look at NVIDIA, you saw NVIDIA really push up here. We didn't see it come down. And they've really produced a lot of good new tech. But again, there's on a fundamental level, the idea of rare earth minerals and how they build their tech on a fundamental level, I think is decreasing, just literally because of what's going to happen with China and everything that's going to correlate that. That's going to put a stop in the supply curve for them. And so as that is happening, I would expect to see a drop in the market going to come in with NVIDIA. Similar situation, NVIDIA really plays off of Google, also because they supply them with the chips. Same situation with Tesla, same thing with Meta, right? Expect to see these type of things kind of go the same way. So these stocks here, right? Netflix, gangbusters, but they're already starting to turn around. You can see right here, Netflix is already starting to show weakness here. We're already starting to see the 8 period turn in, and then we're about to have a cross here. When that happens, expect Netflix to come back down to our levels here. Nice little area here I want to point out. Boom. This is going to be a nice little liquidity pull. When the price comes back down to that 1,082, you can actually buy in and push up, right? Take a call position. Again, it's not financial advice. This is all entertainment and social educational purposes only. But please, this is a potential play you could play off of on this level here. Come in, say as it sells through, and then watch it go back up. So this is kind of like where I'm expecting to see Netflix come back down to, which would be about a 20% pullback to, if not even further, down to our lower levels here at 900. So we'll see what happens there.
I was reading an article about Netflix a while ago, but it was still relevant because it's not financial information that was timely. But it was a person that had worked for a network, CBS or NBC or something like that. And they spent a lot of time programming shows and looking for talent and new shows and all this type of stuff. And they're doing the same at Netflix. And they're talking about the operational rate. At the studio, at the old networks, they kind of found their schedule for the year and kind of sat on it. And their shows, they made 22 episodes of every show. Reruns were in the summer. Advertisers were always happy. And on Netflix, shows are 4 to 6 episodes now. If you're lucky, it's a 10 episode one, and you're like, ooh, big one, big commitment. And maybe if it's good, 2 years later, you'll get another 10 episodes, 6 to 10 episodes of it. So he said, you're always looking for new shows, talking to producers, having to make new stuff. We got so much more going on than a network. He said the average network programming office is a boring graveyard compared to, a streaming service. And he said it burns you out. He said you can't operate at that high level all the time without having a lot of people, without having a big payroll, massive overhead to get this amount of business done. And I was reading that, and I'm like, this is not sustainable. All these streaming services aren't gonna survive. They're gonna consolidate. They have to. They have to consolidate. They can't just rely on intellectual property rights forever, because they need new stuff. And all these streaming services did well when they broke apart and took their IP with them and said, haha, I shouldn't say well, I should say they got subscribers. But they can't grow like they need to, and they can't make enough shows they need to, because apparently, this is anecdotal, this isn't a big science survey or something. Apparently they burn people out, so they're like, fuck it, I'll just give you season 10 of, this boring show and see if you like it or not. Because it's easier than trolling through 93 production companies to see if they have anything. I found that very interesting, and it made me just not want to invest in any of the streaming services.
It's interesting. I pretty much, because I have a friend of mine that I visit a lot on the weekends, and I actually pay for his TV just to help him out so that he has something to kind of watch. So I was asking, I was like, how often do you watch TV and everything? He goes, I really don't. And I was like, do you even pay attention to all these? And he goes, nah, man, I maybe watch once or twice a week. So I looked at him and I said, all right, well, I'm just going to cancel it then if you don't really watch it. And he's like, yeah, I'm cool with it. He goes, I can just watch. Like, if I do, I just pretty much watch YouTube. I started laughing. And I said, all right, that's cool. Dude, I went through and tallied how much I was spending. Like, it was like $120, $130 for everything, which is just reminds me of paying for like Comcast. Like, I'm like, when I tallied everything up, and it was like Max, and I was paying for Paramount, and the ones that you would normally watch, right?
Right.
And it was like $124, like $130, and it was a part of like going through and just decluttering these people that were just taking money out of my account. And I just thought to myself, I wonder how many people are doing that as well. Like, just looking at going like, do we even watch TV? The majority of the stuff my kids watch is literally on YouTube. So the only thing that most people really need is internet service, right? Like, you just need to make sure, so maybe internet service will go up. But that new thing that just came. Oh, side note. Did you see the new discovery of how they were able to teleport information in May? It was like, and they just released a paper recently on literally this. All right, so this came out like probably about 6 months ago. They tried to, and they were able to get my brain now, I'm switching here from finance. But anyways, they were able to teleport one information to another core.
A qubit?
It was a qubit, but it was also a
photon.
There you go. That's what I want to use. And through quantum entanglement. What was so interesting though is now they're starting to do it over longer periods, and really, like, we're talking large amounts through fiber optic. Instead of just sending it through, like, all right, here they put it through fiber optic, and they put it in, they split the photon and put it over here, and just the information went from here to here without the middle
right. It's like Einstein said, it's hocus pocus.
Yeah. And it was the most. I was reading this article going, and so I was like, dude, it's just a matter of time where literally you just put it, you split photons, you have them go throughout all the world through literally fiber optic, and then all of a sudden it's just boom, boom, put all the information here, and just branches out to everybody else. So it's just going to be kind of cool. They're saying how it's teleportation. But what I thought was so interesting is that it actually worked, and I see that being the future of the information or information highway.
Who knows where that's gonna, what new discoveries that those types of things are gonna lead to? All new physics, all new. All of a sudden, like the fifth dimension will just open up, and you'll be like, oh, there it is. You know, it's like,
yeah. Yeah.
But Pedro, when you went on your side story about that, I put wait, hold on, this is a good thing. I put on the graphics machine Pedro side story, just so people tuning in would know. But I want a side story off your side story, so a square root, a second derivative of it, but it's going to loop back up. Bring up Bitcoin, Pedro.
Yes, sir. We're bringing it up right now. Bitcoin as we know it. Let's go. Here we go. Here you go, sir.
Bitcoin dumping.
Yes, sir. Just as we expected.
Exactly. Now, Pedro, I'm going to tell you this story just to break up the economic indicator thing, because this is a good spot to tell the story and why you viewers should listen to us. Pedro talks about what, ladies and gentlemen? The market, it's going to go up, going to go down, it's going to ping pong, back and forth, all this type of stuff. If you collate it down to one thing, it's in order to go this direction, it's got to go the opposite direction first. So at the beginning of the week, Pedro's saying, look, if we start up this week, we're going to finish the week going down. I always listen to this go, And if we start the week down, we're likely to go up. Now he has these lows over here that he's got, different levels here. The local low here and more of a regional local there, or a low here. I'm sure Pedro has an actual term for it. But the general concept is, if we're going to go down and break these and grab the liquidity, we're going to race up to do it. After that, all is good. Going to go down to go up. And so yesterday I watched the market pump, and I was like, I just sat there and I watched it pump. Didn't participate in it. I was like, even on demo account, didn't participate in it because I felt I was just chasing. But I'm like, if it's going to go up, the beginning of the week, it's going to go down. So let me plan for the end of the week. But the week's divided in half. So like middle of Wednesday night, or middle of Wednesday at some point, this is the half of the week. So I'm thinking it's Tuesday. So by this time tomorrow on Wednesday, if the market goes down, no, this is not exact, but it's just, doing some averages. Then on the latter part of Wednesday and Thursday or Friday, maybe it has a chance of going up. But it's got to go down first. And since it went up, I'm like, it's going to go down. So it went up yesterday, and it got to the top. And I was like watching it start to go down. Overnight, we saw the London session just eviscerate Bitcoin with like 10 hours in a row of losses. I'm like, very rarely do you see 10 hours in a row, but I was like, it's going to go down and hit those lows. So Pedro, I put a short on a couple of hours ago, and I'm on the demo account, so I'm up big.
Oh, bro.
And I'm up $700.
I love it.
And I'm just watching the price tank, and it's going down. And I've got my stops, not my stops, but my take profits at the first low and the second low. And we'll see if it has the momentum to keep getting down there, or if we see some bullish divergence and it retraces or something. But I'm in the profits because I listen to the man in the box on top of me.
You're putting the work in, man. Putting in the work, and I'm proud of you, man. I'm happy. I'm really glad for you. You're putting in the work. You know what I'm saying? It's like when you see the guy in the gym, right? He comes in, the chubby guy, and before you know it, you start to see the guy starting to get his shoulders starting to get a little yoked, but he's still got that belly. And then before you know it, like 6 months down the road, you look over and that guy's all yoked up, and you're like, "Dang, dog, you put that work in." Well, bro, you put that work in. You put that work in, dog. Good job. Good job. And you've been writing down your trades, you've been analyzing it, you have a spreadsheet, you've been systematically looking at your trades and understanding them. You go back at the end of the week and you study them and you realize what you did, what you didn't. Then you come into the next week ready to go again with your data and to really self-analyze it. That, going from here to just moving it to here, man, is just, that's beautiful to watch. And I love it. I love it, man. Good job.
Let me give you an example. One thing I learned from going back. I'm going to turn my screen on here. Was this peak up here? Yeah. Make myself big here. Come on, screen. Come on, screen. Come on back. There we go. This peak right here. Right. So the market was pumping yesterday. It's pumping like crazy. And another bull flag forms in here. Old Tom would have taken this trade here and we're kind of in a premium here. We're at the top of the market for at least for the day or for the region, whatever. And the market's already pumped a lot, and it's starting to consolidate a little bit. It's got a bull flag, and it in that time frame, and I don't know the time frame thing should happen, but in that time frame where a bull flag should kick off, which depending on what chart you're on is not that many ticks, it doesn't. And I would let it ride for a while. I'd say, well, it's still kind of in the flag. And once you let it ride after consolidating after a big pump, there's a market maker out there that's going to take profits, and a bunch of them are going to jump on it, and it's going to go down. And I used to stay in those trades as long because I'm like, it's still a bull flag, it's going to go up. Well, it was a bull flag a few hours ago, it's still going to go up. And this time I went through my things and said trade bull, because one of the strategies in the thing is bull flag. And so I looked at all of them, the win-loss thing, and I was starting to lose them. And why? In premium, up at the tops. So this time I didn't take it. I was like, nope. And I didn't go short. I wasn't just gaming the markets because the going short here isn't one of my trading strategies.
Yet.
Right. A reversal is, but I wasn't, that's not what I was practicing. And then sure enough, overnight in London, the thing just goes, retraces a little bit this morning, gets weak, comes down further. Actually, I'm getting my bull flags confused. This one was a couple of days ago, or last week, or whatever. This is the one last night, or early yesterday. And so you can see it's like a little rising wedge there. It still looks good, like, oh, that's going to keep going forever. Nope, moving averages said bonk, down. But right here, I said, all right, this was this morning. I looked at it. I said, it's got momentum to hit those lows that you had put on your chart. And I said, I'm going to take the short. And I did, and it played out, and I'm getting laid, played, and relayed. And it's really tanking now, Jesus. 3-5.
He's a good guy, ain't he? All right, so let's go ahead and pull up here just real quick. So we didn't really go over Bitcoin here real quick. We'll go over the analysis. We did go over the analysis yesterday. We talked about it going up, showing weakness, and then we talked about the volume really just kind of dying off. And so I said, you know what, we should expect it to see it go up, then down. We talked about it playing here over the weekend. I personally thought we were going to see a up, then down over the weekend, right? But it kind of went just sideways. And then from there, we saw it go up on Monday and a sell off here. So instead of it selling off on Monday, it sold off on Tuesday here. But again, these are the areas here that I'm looking at. We've got that 50 period moving average sitting here. So be mindful of that can act as liquidity to come in to buy. And as well as this lower level here where we're going to put this here as a potential play as well. So the potential play here, if we continue to keep going down, is going to act about that 102,660 area. Again, that's that 102,660 area. You got to be careful to say that 660 area. but those are those magical numbers here that people use to actually play off of. And so right here, you can see that area is at the bottom of that weekly zone and monthly zone here that we were talking about. So I'm kind of waiting to see how it's going to play here, but ultimately be ready again between where we're sitting at right now to about that 102,660. So you can see it come down probably another 1,000 points before we kind of see a pullback here. So be ready for that, guys. Let's jump right here.
Wait, 1 second here. Another 1,000. You use prices instead of 1,000. You mean $1,000, 1,000 points? I still get those confused.
$1,000. I apologize. So
well, I get confused over points because when we switch between graphs so much.
Yeah.
At some point, I still don't have it all figured out with ticks and points, and so I struggle with that.
That's all right, and thank you for clarifying that. I mean $6,000 or $1,000 on Bitcoin. See it drop. So right now it's in at 103,540. I'd expect to see it come down to 102,660, which is about $1,000 here of a drop.
I'm ready for it. I'm short. I'm like this right now, Pedro. I'm like, what's Tom's position in the market? I'm short.
But again, be ready. If you're already in the profit, I want you guys to making sure that, oh, there's my beautiful. Oh, that's funny. Yes. So what was I gonna say here?
The great graphic machine can't even keep up with the tanking here.
Yeah, it's having fun here. All right, so if the market starts to show some strength here, just be ready. Make sure if you're short here and you guys are in the money here, what we want to see is if it starts to show strength, we want to see an increase of buyer volume. Okay, right now we're seeing an increase of seller volume, right? And we can see it going. But if we see we get above the 15 period moving average here with green volume, that's this area down here, and we start to get above here, then expect it to either continue up or going sideways. Also, the other metric would be just a stagnation of seller volume. So if we start to see seller volume stay about this level here, and we start to do this here, then I would expect to see us then do a sharp reverse up. So be paying attention to your 15-minute and 30-minute charts here, because these will be the ones that will dictate you where the market is really going, and that's what you want to be looking at. Also, if you want to, you can bring up your stop, bring down your stop to the seller wick here, which is going to be this guy right here. Right above here, right? So if your stop is all the way level, make sure you're there so that you keep profitable. So if Trump comes out and says, hey, we're going to make Bitcoin the international money thing for the UN, and the UN goes, you know what, that's not a bad idea. You know, like, so you never know, especially with Trump. So make sure you're ready. All right, so that's it in a nutshell. Did you want to elucidate on anything here, or is it okay if I go back?
Nope, I was just I needed my little side story for that to enlighten our trading students there, to say you can do it. You can do it, ladies and gentlemen. I'm not going to have the enthusiasm of Sam Price, but I can still get out here and say you can do it. If you learn, you can do it.
You can do it. All righty then. Okay, so let's jump into here real quick. Let's play. Where are we playing? Boom, boom, boom. We were at the bonds and the yield. So we just went over the stocks, and give me 1 second. Look at my notes. Stocks. All right. Oh, I forgot to mention this here on the stocks.
You had just gone over Netflix and Nvidia.
Apple. Yeah. So Apple here. I was looking for the apples. Where is my glasses?
Be ready for the third grade reading.
What are you talking about, bro? I read at a third grade reading. What are you talking about?
Then be ready for kindergarten. Really, ladies and gentlemen, Pedro just has an eyesight problem, not an education problem.
No, I'd rather you think less of me than more of me. You know, it's better to be able to come up from the top than you have this high value of me and then I drop from it, right? Like, hey,
keep the expectations low.
Keep the expectations low. And if I happen to hit a 500 over and over and over, and you're like, dude, he's hitting 500. He keeps saying he's like at a 100. So, all right. So here we go. So one of the things Apple is, we talked about Apple a while back ago, seeing the sell-off come in. We talked about, I really expected to come back down to that 173 area. Apple again has not had the best news lately. We've been hearing just like them just talk trash about the industry that they're in and everything that we've seen. So one of the things I think it's so important to be looking at here is that if Apple goes down, I think it will drag a lot of other, because Apple will slow down in the production, a lot of things. And so we will see the world, because they are a world business. They have a lot of tentacles all over the world just to make your Apple phone. I think it's like 1,500 to 2,000 businesses that are used to actually build what you need, if not more than that. So again, there's a lot of things that tie into it. So if we start to see a drop in Apple, then expect a lot of places around the world again to follow suit on that. So I'm expecting to see Apple really get down to that 170 area. If not, again, I'm still expecting us to come back and test this area down in 2003, really playing off that 124 area. We can hit that area there, then this would be I think that is going to be a great little area here for people to play off of. So this is that 124 area here I'm kind of expecting, and I'll put this here because this will act as another little play for you if you want to take a call position or something of that nature. That 141 area here is another liquidity area, and we'll add one more here.
What are all those little marks on the volume levels down there, the D and E and...
Yeah, so this is earnings, right? And then this is actually dividends. So these are the dividends that they pay.
Oh, I see. I didn't realize the chart was so big there. I mean, the time frame was big.
That's what she said. So,
ooh,
sorry, that was horrible. Forgive me. That was not okay. I just was so juicy. I had to do it. Okay, so.
That's what you get for that one.
There we go. All right. So, all right. If you guys are watching us and you're from any of the places that we've shared our stuff, please log into the Rumble account and just say something. Even if it's say something that you type, I love the humor in it. If you want to make fun of my big nose, which I do have one, and my long hair, please do as well. That would be epic. All right, let's move forward here real quick. Now, I thought, which when we've talked about this, that McDonald's was going to go down here. I do not know what happened to all my drawings here because they were once there, but they've been in this sideways pattern now. Again, and this is another bellwether, or another canary in the coal mine, or the bellwether of the economy. Just like how we're about to go over crude, but more importantly, copper. It's one of those things that you'll see here as we play. What time is it? Okay, I still got a few more minutes. All right, so we're watching McDonald's here, starting to see a sell-off. One of the things I do expect us to see is kind of come back down into these lower levels of that 250 area here. From McDonald's. So if you're looking to be playing some of this, as the slowdown in the economy happens and people really just start to stay at home and eating. I mean, going out to eat fast food used to be like, like we're gonna go hit it up. It was cheap, it was something, but now it's more expensive. I mean, it's almost expensive as like a normal dining experience now. And because of that, people slow down on going out to the just McDonald's. Dude, I went to go check out how much, because I want to get a taco, like the box of tacos, and they're sitting at like $35-$40 a box now, and used to buy them for $15 to $12.
Ouch.
Dude, over at Taco Bell. And I was like, dude, we all know that the meat in here is half meat and half mystery. So it's like, how can you charge that money for that type? So I literally saw that. I was like, thank you, I'm good. Boom, drive away. So it was kind of crazy with everything. Ultimately, I'm expecting to see kind of and I've said this now a couple times, the market to literally have deflation versus inflation. I think that Powell on Wednesday is going to say, hey, look, we want to keep this market where it is. He might even think about raising rates, which would then drop the whole entire market. What did he say? What did he say? Pure chat. In the background. Watch him dance on his phone. Distracting. I still have.
Chad, do you know how long I've been waiting to have someone to say that?
Dog. That's what I'm saying. Whoever you are, Pure Chat, you are now loved, bro. You are in the community. Let's go.
Oh, that was excellent. That was just excellent.
All right. I'm trying.
I'm actually crying. I'm laughing so hard. And the best part is right when I looked up at Pedro, I knew it wasn't talking about me because I just got my hair cut. So my hair wasn't as frizzy as it was before. And I knew Pedro's, I used a green screen. Pedro used a virtual background. So I knew exactly what was talking about. And I was even looking at the screen. I look up and just then his hair does this fire dance like.
Dude, I'm trying so hard to get through all this stuff. I was like, that's so good, dude. Peer John, what's up, Mama? What's up? It's good to see you. I don't even know how'd you find us.
We've seen Pure Chat around here before, I believe.
Good.
Oh, come on, Bitcoin. I need you to dump further. I know nobody likes people that say that, but I'm short right now, and I want it to hit 102.
All right, let me finish here so we can kind of get along here real quick. So,
all right, keep going there, Pedro.
Yeah, because we still got quite a bit to get over. Go over, excuse me. All right, that's what she said.
That's what started it off.
I know, okay, I know, dude. I'm sorry. That's it. Excuse me for my crude humor. I love crude humor, as everybody here knows. Here we go. All right, so we've got a few little things here I want to point out here with McDonald's. If we get down to that 200 area here, like I said, that 250, 200 area is where I'm thinking we're going to see this market come down to. This area here, let's pull this up here. That's going to be a monthly, boom, it's 4.
While you're doing that, Pedro, I think I got it figured out why they stopped serving us ads on Friday to read, and then they did it again today. It's because I missed the first one.
Oh.
That right at the beginning of the show, we hit a total of 20 viewers across all platforms, and they served up one, and before I could get to it, it disappeared. And then since then, they haven't served me another one. Usually, if you read the first one, then there's a list of other ones coming up.
Yeah.
And I missed it, and so I think because they miss it, they say you're not interested, and they send it off to someone else.
It's like when
So I just got to cut you off faster than I normally do when next time one comes up.
Dog. Be like, oh, you hit the little ding, 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 or little.
Oh,
cash.
that's what I need to do. Yeah, I'll come up with a little ding, 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 ding to let other people do.
Sound. Like a cash sound, like money. Dun, dun, money. You know, there's that 80s song.
No, not that.
That's gay, bro. That's gay. No. The Cash Money sound. You know that money. That song with
Pink Floyd's Money. I can't play that.
Oh, we can't. You're right. We would hit the strike. You're right. Shoot. Okay. Let me continue on here while we're moving, because before you know it, 2 o'clock is gonna be here. No, definitely not that. Definitely not that. That's
No.
Nope, not that. No. Stop. Nope, not that.
Nope.
Nope, not that. All right. Why?
I'm just ruining Mr. ADD's whole day here. All right, what's next, Pedro? What's after McDonald's?
All right. So again, I want to finish off this little thing because again, we see the market come down. These are really low levels. These are areas that I want you people to step into and get in at it. So I like this area here, that 282. Also really like the 222. You have some good areas here again that you could play off of. This is going to be a great epic pull up or push up at this level of that 243 area here. So these little areas on McDonald's are good little areas for to get in at pullbacks here. So the purple lines are liquidity pulls, and the green lines are literally where I expect to see buyers really step in and kind of push the market up for a week, potentially 2 weeks here. All right, so let's go ahead and now move on to the bonds. Boom, 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 boom. All right, so as you all know, we look at the short yield bonds, which is basically going to be the notes. And as the notes come in real quick, I want you guys to be ready for it. So we pushed through our area here of the 4.28 area here that we had marked between the 4.28 or it's 4.25 to 0.0 here, or 4.4% basically. And so we're watching it come down here. And so we've played off this here now for the last few months. We were talking about the sell-off coming in, and as it came down, it hit our areas. The next area I would expect to see the 1 month short-term yield here is down about that 330 or 350 area to the 325 area here. Percentages. So we've got the 50 period moving average. So as we're coming down into these levels here, be ready. So if you got money sitting into a money market account or something like that, and you've been getting good yield on that, be potentially looking for another avenue to get ready for that. In addition to that, this also shows kind of like how Wall Street is looking at Wednesday's announcement. Potentially we could see Powell coming in and lowering rates, even though we have seen an increase in crude oil as well because of the Israeli and Iran conflict going on. So be ready for that. Also, there's going to be little news coming out in relationship to that. Let's check out the 1 year here real quick. 1 year bond. Boom. No. Or not bond, excuse me, yield. On 1 year yield, boom. Dude, what? You're not gonna give it to me? Oh, that's. Why aren't you giving me 1 year bond? Or 1 year yield? Oh, that's why. Okay. Why am I not seeing it?
Anyway, ladies and gentlemen, you're watching DYOR Live here on the DYOR Media Network. For those of you that are new watching us on Rumble, my name is Tom, also known as Striking. The man in the box above me is Pedro Garcia, the crypto chart analyst. And today is his day to shine on Technical Tuesday, when we go over the economic indicators to let you know how the rest of the world affects the bags that are in your pockets, or on your phone, as they say, and why it's important for you. And even if you're not a trader that relies on this information, it's excellent to learn, because then you can actually listen to the news and make sense of what they're saying, or figure out that they're bullshitting you. Just bullshitting you. And if you just joined us, I noticed we had a bunch of people just join us. One of the things you see the protesters out there protesting, and they're talking about the evil man that's the president, because the dollar is weaker now. And I mentioned this an hour ago on the show, but the dollar is weaker for a reason. We needed it to be weaker to pump up our exports. And when the dollar is weaker, we actually, the results of, there's more hiring because we're exporting more. And it's a good thing. Temporarily, it can't get too weak. There's always a fine line of where things go. But just things like that, little nuggets like that, allow you to listen to the news or do your own research. And that's why we're called the DYOR Media Network. Did you find what you're looking there, Pedro?
Yeah, I'm just gonna sidebar it, and we'll go over it tomorrow, just so that we don't. You know me, when I start to really focus on something, I can get lost in it. So we're just gonna sidestep. We'll come back to that tomorrow. Also, shout out to Pure Chat. Thanks, man. Appreciate you immensely. Thank you so much. All right, let's jump here real quick into the 2 year, and we'll go over a lot of this stuff. So we're watching the yield starting to play around here. We've been watching the European bonds go through some hardships lately, right? We're watching a bull steepener here with them, and so it's really kind of hurting them in regards to what we're seeing with the yields there. And in addition to that, playing both ends on the American bonds as well, or yields here. So it's kind of been playing a lot of kind of jigsaw here in relationship to see really where, if we're going to see a kind of a collapse here, like what we saw during potentially 2008 situation. Now, I didn't want to point that out here, but basically back in 2000, the markets were at leverage. I think it was 120.
Yeah, it was massive.
Yeah, 120%. When you look at back in 2008, I think it was 108 or something like that, over leveraged. Then if you look at 1929, I believe it was about 100%. Now, Tom, looking at the markets right now, how far do you think it's over leveraged currently right now, just by looking at things?
I'll guess it's badly over leveraged. Again.
Yeah, it's about 200% over leveraged.
200%.
Yeah, so we're talking. It's pretty. It's like a. If you ever seen that movie Whale, right? And remember the part when he stands up and he's trying to walk to his daughter?
Yeah.
That was the most touching moment. I was like,
Brendan, whatever his name is, the actor.
Yeah.
Plays the overweight guy. Yeah, that was an excellent movie.
Excellent movie. My goodness. Love that great player. Anyways, the reason why I'm saying that is that's basically what is happening to the U.S. economy. And so it's struggling underneath its own weight of over leverage. So this is why I'm like, I'm trying to prepare you guys to see potentially what most likely is going to happen one way or another. And what's going to be the catalyst, we don't know. I mean, we've literally had COVID. We've had everything underneath the sun here happen. Potential World War III between Israel as well as with Iran. I mean, it's just nuts.
Pedro, you've been working on your pronunciations of words that begin with I think, haven't you?
Israel, yeah, I have. I've actually been listening to so many commentators, and like especially people from the native area. And so the way they say it is so much different than Iran and Israel, right? Like, or Israel, right? So
wait till you hear how when here I am in Ottawa and I say, I'm going to go over to Montreal for the weekend. People look at you like, who the F is this guy? I'm like, well, how do you really say it? Montreal, of course. I'm like, well, I'm not French and I don't speak French, so I'll say it however I want. They're like, the English speakers, off with your head.
Off with your head. Okay, so I've got 30 minutes to get through almost like half the market here. So, all right, so let's look at this here. We've got on the 2-year bond here, if you guys are looking to trade this here, I would be looking at this level right here with the 50 period moving average here. We're watching the 2-year yield here. I keep saying bond, forgive me, 2-year yield here. Starting to see the sell off come in. And so I think we will see another bounce off of this level right here. Once we hit it, we have the 50 period moving average, and it's sitting around that 250, or excuse me, not 250, 350 or 350%. Why is that so hard for me to say? I don't even know why it's hard for me. I say it and I say it. It's hard for me every week, so I just need to figure out what the right word to say. So, but this area right here, you can see where the marker is. I'd expect we have the 50 period moving average. It's the 3.5 area here. Be ready. So when the market hits it, you should be able to capture that 2 period pushing up. But ultimately, I'm expecting to see if we really start to hit that low here, and we see it go, we potentially could see on the 2-year mark here a 2.26 area here. Okay, now let's pull up the 5-year. The 5-year could potentially come back down to this area right here. Again, this is going to be a 2.5 area here. And the part behind all this is seeing us come down here isn't necessarily a good thing or a bad thing. It's one of those things that they're going to try to offset the economy if the stock market starts to really fall, and to see if we can save it, right? And we'll see what happens there. But ultimately, if you're an American, you're in America, the dollar and where it's sitting and how it's sitting is going to benefit you in the midst of all of this turmoil, okay? Based off of manufacturing and the economy, where people are going to go to buy goods and services, good places to buy it that are cheap, and what we're seeing here in the near future. So this is, and we're going to go over this in just a second. There's the 5-year yield potentially coming down to, we're seeing the 10-year yield. We bounced off of the 4% here that we hit. This was over a couple months ago. We've come back down again, and so one of the things I'm now looking at is to see it get down below. Come on, dude. Boom. Next level here is honestly going to be playing at that 325 area here. Once we come down, that's sitting around that 50 period moving average. The biggest concern here that I have is if we start to see a free fall below the 10-year yield here, around that 325, the next level here is going to be the 2. All right, so the 250. So we're talking a 75 basis point drop, or 75 point area here to be a 75-cent area drop here, or 75% drop here from the 10-year yield here. So it's important to be paying attention as this is coming below this level, which is going to be the 380 or 384 area to that 372 area. As you can see the trading here. So, or really because it's in increments of 25. So it's really 375 to, or was it 3.38 at the 4% to 375 or 3%, 375%, whatever you want to see. But the drop here is from that 375 to the 325. That 50% basis drop is a big drop there if we do start to see it get down below that. All right, so next let's check out the 20-year. Now, as you notice here, because we had a bull steepener here, the idea is that we had that in the past. We've kind of diverged from, which has been nice. And look at Europe. Europe is having a bull steepener right now, and again, that is an indication for major slowdown in the economy, right? And America is kind of playing that, but you can see as we're going over, our short-term yields are lower than our higher or longer-term yields on the time scale, right? So that's a good sign saying that we're in a decent spot. But if we start to see some major sell-off in the economy, that could be a bad situation as we start to move. So I'm paying attention to that, keeping a close eye on that, and I'll give you guys updates on here. But it's similar situation with 3-year or with the 30-year yield. We bounced off our area here. We came back up, retested our supply area here. And now we're looking for it to really kind of come back down. Again, I think we'll come and test this area right here. Let me pull up my monthly. I'm gonna remove this. Boom, boom. And we're going to come and test this area right here on our 30-year. Powell will probably drop it.
For those of you watching, if you could take a moment to share the link for our show in any of the trading groups you're in. Every trading group has a unique flavor to it and what they want to learn and listen to and stuff. Every once in a while, someone shares us with a good group that wants to be edutained at the same time, educated and entertained while learning about the markets. Like I said earlier to Pure Chad here on chat, Tuesday is a heavier, broader market recap, more crypto on other days, but we're here every day. So share this around. We'd really appreciate it. Today is not a good day for reading the Rumble ads because I missed the first one. But reading the Rumble ads is fun. I feel like a 1950s variety show announcer.
Well, what's interesting is that your word usage is great. Like, it's really, it's.
I got that 1775 coffee thing in my head. It hits you. It hits you harder, or whatever it was about referring to CNN fact check being ridiculous, and then it's guaranteed to stir up emotions like talking politics with your mother-in-law, something like that.
Yeah, it's really good. It's actually one of those ones that it's like, remember when they started making funny commercials? I think it was the Geico who first started it, or something like that, and then everybody else. It was such a huge success. That it was epic, and so I say that because now they've just gotten to the point where they have to be funny. Like, you have to be funny now to get a hold of somebody's attention, and I love that. If you're gonna take my time, at least make me laugh and shoot me off dopamine hit. Like, hey, that's just how I expect it. All right, so let's check this out here real quick as we start to move forward. On our 30-year, as the market starts to see a sell-off, and if we do see Powell step in, I'm pretty positive that we're going to see Powell probably at least put in a 25% basis point, which would then drop our market here if he is going to do it. I think he's going to stay stagnant. I don't think he's going to drop it. But if he does, I don't think he's going to drop it majorly. And so I think we could see it come down to that 4.75 area here to the 4.50 area here to these lows. So kind of be ready for that as it comes back down to this level. Next, all right, we went over bonds here, or yields here. We're going to go over bonds here, which is basically going to be an inverse relationship, as we all talk about typically, all right, because sometimes it's not. And so you, at those times, you have to be paying attention. But again, I expect, we've talked about the bonds finding support at these lower levels here. We went long up here on January. Back, if you look at our inauguration, which we had I think we had together like 2,500 people who watched us. Dude, have you checked out the numbers on that? They've actually gone up to 3,000 now. Like, it's like,
sorry, I was typing something into Grok. What were you talking about? Sorry.
Oh no, keep going. I was just saying, go back to our viewership on January 20th when we went over the inauguration, and I gave everybody a direct game plan for the Trumpian market moves, and so that almost played exactly how we thought. So you can see here that back here in January, we saw a bounce off of this level here, bounced up to our supply area, went further than I expected, come back down. But again, I expect us to see an increase of bonds to come back up and test that 117 to the 116 area on the bond level here. And if not, if we start to really get a lot of turmoil in the market, I'm pretty positive the rest of the world is going to FOMO into the US, because honestly, what we buy and where we go is where the rest of the world goes. So they're going to want to, with the advent of what's happening in China and the turmoil there, excuse me. Sorry about that. So the idea behind it coming down with what's happening in China, what's happening in Europe, the instability with Russia and that whole entire circumstance, especially with Israel and with Iran, right? These ideas behind it here is like that, but you think, yeah, baby, yeah, let's go. Anyway,
hearing you say that drives me crazy. It's so funny.
All right, so here we go. I'm expecting to see the bonds get back up to their highs here, up at that 121, if not even further. We could see it kind of come back up and tap up into that 128 area as we see here. So I'm going to mark that up here just to say we called it. Boom. All right, it's the reversal. Actually, could even go up to here. Play off this level here. And the next level should be right here. Yeah, all right, so these are just kind of the levels that I expected to see us play off of as we start to continue up. Again, these are just the plays that I see what's actually happening. Now, over the last few months, we've seen people dropping the US bonds because the need for the US dollar has not been there, primarily because of the trade and what's actually happening. Everybody typically has to buy US dollars. Now we're about to go into the dollar here. Everybody has to typically buy US dollars. And so people, when they hold US dollars for trade, they trade things back and forth with US dollars, then, or the euro dollar, and how you want to, we can talk about the nuances there. But for time's sake here, I want to add here, I want to just keep it direct. You have, most people then take their dollars and they buy US bonds to get a yield that we just went over. Okay, and so the long-term bonds here have taken a big hit because a lot of people are thinking, well, is the U.S. going to be as strong? They haven't been acting so what they were expecting back in the last 20 years, right? But basically, we're going back to how we've played ball from the 1970s to the the late 90s, early 2000s. Things changed during the NAFTA agreement. But ultimately, we're going back to that mindset, which gave the US dollar strength, which gave the bond strength. So again, right now it's topsy-turvy. But again, we're going back to where men have to be strong men and weak men get eaten. We're going back to that time period. And so in this same sense, I expect to see U.S. bonds. I hate to say it, but most men here are, I've met a lot of aggro men in the gym, bro. I mean, more so than I'm like, holy crap, these dudes, they're like, yeah, like America. And I'm up in the Northeast, which is extremely extremely liberal. So I'm just like hearing these guys going, dude, these guys are, I feel like they're ready for war, dog. Like just hearing them talk about what's happening. They're talking about the Israel and Iran and how that's all working. So it's kind of crazy. So if stuff happens, I think America gonna get ready to just kick ass, which is kind of gonna be scary. But that was kind of a crazy sign for me to sit there and see that. So that's why I think we potentially could see a push up, come back down, boom, play, and then we'll see what happens. But ultimately, actually, I'll do that again so you can take pictures of it. Boom, 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 and play. And so this could be happening over the next few years as Trump really starts to restructure the U.S. economy and making us more of a producer and export nation versus an import nation of goods and services. And so this is going to be one of those things that I do expect.
What chart do you have up there right now? Sorry.
This is the 30-year bond.
Oh.
Yeah. So we just went over that here, and we'll do that again. Boom, boom, boom. Boom. I think probably around 27 mark area is really going to be that area that's really going to let us know whether this is really going to happen or not. So that's kind of, I said he's got 6 months to a year to really, since his inauguration, to really get his initiatives really up and running, getting going. Because come midterm, if we don't see a good bounce in the economy here, then I'd expect to see a turnaround in what we're going to see with midterms for Washington. So again, I think we're going to see a flash crash, boom, see a rebound, and then see it scream up. And with that, we then go into the U.S. dollar. U.S. dollar has been showing weakness. We talked about how we wanted to see a weak U.S. dollar because it allows the rest of the world to want to go through. Their dollar will get strong, or their currency will get strong, and they will typically want to buy U.S. goods and services because we typically produce a decent quality. And since we would be the lowest currency, we'd be the cheapest entity to buy from versus other nations. Now, we've seen the yuan always play with, that is the CCP's or the Chinese country's currency. And as the yuan starts to, they're trying to push it down, but they're also having a really hard time with the tariffs. And as those tariffs have really been put just a shock, a juggernaut shock to the economy for the Chinese government, that's really hurting them. And so this is why we talked about, I expect to see some form of a restructure within the CCP, and the draconian hand that they've been living by, I think it's going to change. And so we'll find out what happens there. But that is what I'm expecting. As the US dollar keeps staying at a low place, during our inauguration pod, our cast, which was right here, we talked about while the US dollar was sitting at 109, I expected to come down to our low areas here at that 97 or the 98, 97 area. We've seen exactly do it the same thing that we expected, come down, and now we've been playing between this area of 100 to 97 area. So I do expect us to stay within it, and I said potentially it could come back down to that 94 area. So we'll see as we start to move forward. But we want to see a weak dollar so that people want to do business in America. After the crash, they're going to need to be able to, this is when ideologies just get kicked out the door because your people are hungry and you need to buy and get goods and services into your country. And you go to the, what's going to be best, cheapest for us to buy as a nation. and versus if you can't, produce it, you don't have the money for your economy. These are some of the things that I would expect us to see happen. Now, here is the dollar. In correlation with that, let's check out gold, because gold and silver, we talked about yesterday how it's always been a 10-to-1 ratio. Right now it's a 100-to-1 ratio, whereas silver is sitting at $30, and we're watching gold sitting at 3,000 and higher. And so these levels here is one of those things I do expect to see some form of consolidation. I think they're with the expectation of gold really starting to push higher is something that I don't think we can see that ratio go much further. Either gold is going to sell off, or we're going to see silver really pick up and kind of meet that need. And if we see that, that's really going to mess up a lot of the economic usage for silver and gold. So I think gold is going to come back down into this lower level of that 3,100, potentially the 3,000 area here, because like you said, our high here was 3,500. Now, during the Trump administration, we talked about it going from, I think we were sitting Trump administration right here. So it was sitting at that 2,700. Our area that we talked about here, I said we should see it get up to that 3,300. You can go back to the actual show and you see, it looked like this. And I said we're getting up to there, and you can see that's what it did. So go through and watch that. You can see a lot of stuff. Again, we're going here. But now I'm switching things here because of what I expect to see coming over the next 6 months. And so I do expect us to get down to these lower levels here again, potentially to that 3,100 to the 3,000 area here. Now, the bellwether of all of this, it all depends on what's going to happen with copper. Copper is the underlying structure that actually we use for electricity and energy and power. It's how it's transformed, right? And so again, we're going to go over crude oil here again, but ultimately I do expect to see copper get down lower here. We're already seeing a turnaround into this area we talked about. And if you guys took this play a couple weeks ago here, this was the liquidity pool that I talked about. I said if it gets above here, expect it to come back down and go lower. And that's exactly what we saw here. So one of those things, dude, we need to really start to like chronologizing these calls, because it's like,
I know, I'm working on it. Is one playing out here in the copper market?
Yeah. Well, so I'm expecting it to go down here again, but we can see here that when it came above this area, it was in the evening. But once the market opened up for copper market, which opens up typically around 8 o'clock for the futures, it's 8:10, excuse me, 8:10 for the copper market, which is about right here. Boom, 8. Just want to make sure my time here. New York, so it'd be, 8. So it'd be around here. So here, so copper market opens up at right here. So you can see we shot up above our liquidity pool. They were pulling ever, and then they just dropped it from this moment on down. So I'm expecting to see it continue down for copper. Now, the biggest thing about copper here is that whenever you go through and you build a house, and again, I'm expecting deflation here, right? And I don't expect inflation to kick everything up. I expect things for prices to go down because people don't have the money to keep buying this stuff at high prices. So we're going to see in kind of a situation where we see businesses really struggle, right, until things kind of get worked out over the next 6 months to a year here, right? And then with that, if we see prices for copper to go down, this aids in Trump's initiative to go through and build structures so that we can start producing things, so we can buy on the market low cost for copper. Then it makes it easier to build these factories and hence get things up and running. So again, this is something I do expect. This would be a Trumpinian play here. And so this is where I would expect us to come back down to, which is going to be that $4 mark, in addition to potentially even the 350 area. So that's one of the plays I'm expecting us to play here. And boom, we played off our area here for a while now, right? We bounced off of this. We hit our supply area here. Again, we had it. I talked about the fall here during the election area here, and then we saw it, or yeah, saw it go up then come down, but they needed to keep continuing down here. So these areas here, I do expect to see it get down to that. We're just going to keep this here. We're going to keep the price here at that 350 and expect it to come down here at this level right here. And obviously we're gonna have, you know, topsy-turvy ping pong situation, but I expect ultimately to come down to that 3 area here over the next 3 to 6 months here, as we really start to get going on building those manufacturing plants here. You can see here the turnaround on the 8 period moving average is about to cross the 20, and so as that happens, expect it to continue down. Alrighty, there we went over that. Let's go over crude oil here now. Now crude oil, our play here did end well, okay, where we came down to our area here. I thought we were going to keep staying down this level, but because of the war between Iran as well as Israel, because they say it just like that. Israel was actually practicing.
It's like mentioning talking about Puerto Rico and say, oh, where are you going on your vacation? Oh, well, we were thinking of going down to Puerto Rico and having some time on the beach.
Every time, dude, like Puerto Rico, and then from there we're gonna drink Mai Tais over in
Well, there was a commercial in Chicago. Banco Popular came into Chicago heavy with advertising, and the person announcing it would be talking in perfect English, Midwestern English like me. Oh, I think I'm going to change my bank. I'm going to move over to Banco Popular and move my money over. And you're like, wait a minute. Why would you speak with 2 different accents in mid-sentence? Other radio stations started making fun of it. The talk show guys, it was pretty funny.
Make fun of it. Please make fun of me. I love that stuff, dude. Like, Puerto Rico, hey. But like the biggest key though here, and I think what's interesting when I look at it, is when I look at this market and I see what's actually happening, it's exciting for me because ultimately I'm watching the market really play in a way that is, it shows me that I have, you know, I've got a good eye, you know what I'm saying? And so for me, I really like that. And it's happened now so many times that, I mean, I take these trades, but I take them on a small account because they're big moves. They're really big moves. And, you know, I just probably one of these days will go through and play it. But like ultimately, like on a big play, right? But it's always, you know, I'm a wuss when it comes to these trades. Because they're big trades, you know. I've got a huge margin. Typically, I have a very small risk, right? When I trade something, so it's, you know, when I'm dealing with literally, you know, 2-3 week periods where it could fluctuate, it's hard for me to trade that. So, all
right, Pedro, what time frame you got up there? The daily chart. Bring up like the 5 or 15 minute chart. I know that's not really a chart you watch in crude oil, but
no, I do trade crude oil every morning. Go ahead.
I was watching someone earlier talking about that crude oil was forming a bull flag there, and it did not there, but the previous time frame from the 3 a.m. to 9 a.m. And it did the droopy dick thing first, and then it did pump up above that moving average. So that person was correct. Did go up.
Mm-hmm. Yep. Here we go. So I'm expecting this to really kind of sell off though. So we saw a big pump here, but as we start to see things kind of settle down in the Middle East, I would expect it to, I just think Israel is going to just bomb the malarkey out of any area that potentially they might think there might be nukes there. Trump is pretty set, I want to stay out of this, but he has not disavowed Israel from what they're doing. So it kind of plays hand in hand. He doesn't have to go into Iran and just do a bombing and say there's what's the word, weapons of mass destruction. He's just gonna let Israel do his dirty work and just take out all that area. So it's gonna be really interesting. Now it'd be another crazy situation if you saw the people of Iran step in and say, we're tired of the Islamic rule of a Shiite ruled nation, and we're going to go more to a Sunni thought processy, which would be a lot less draconian and
Crazy.
Well, it's the way they live their life. I'm not going to call it crazy or not, but it's, it's
Well, to be honest, the more in Iran, the more the more secular people are the largest part of their population, kind of like Turkey, and they're tired of this. I used to be friends with the Irish consular general, and he lived in Tehran for a while before he moved to Canada, and he's like, yeah, the people there have no love for the government. He said it's just one giant soap opera all the time, and it's keeping them from getting on with their lives. So they just need someone to kick them over the edge and bring them back to reality here by getting rid of this government. Basically, it's an organized crime family. That's what it is. It operates like one. They have their hired goons that go out and suppress dissent, and when someone gets out of line, it's literally no different than The Sopranos. You put the headpiece on Tony Soprano, and you can just call him Ayatollah. Same thing. And the people don't like it. And he said, we had everybody came to our consulate trying to get to Ireland to get out of the country, and now, and he said by law we had to take him because of the EU, and so he said now half of Tehran lives in Dublin. He said. But anyway, that's thanks for that about crude oil. I would just a side note to Space Cat and I have been going back and forth on the comment section about elections. Just we did it in text, but just so foreigners understand from a U.S. perspective that no body, meaning body of people or Congress or the president, can delay elections or cancel them or anything like that. Elections, unlike in parliamentary systems, the elections are not the purview of the government. Elections are written in the Constitution that these have to happen, and the president and other elected officials can only serve so long. People don't lose office when the government retires or whatever. Exactly 4 years after someone says, I do, for the president, and 2 years for the House of Representatives, and 6 years for the Senate, they're out of office. Nobody has to take them out of office. Nobody has to do anything. They're just no longer the president, no longer in government or anything like that. So, and all of that's enshrined in our Constitution. Now, Congress can move the dates around for when the House of Representatives or the Senate elections happen. The problem is it can't be after the current date. It can't be later than the first Tuesday in November on every other year, because then there would be no Senate, or there would be no House of Representatives, and 1/3 of the Senate would be missing. And the president's election date is enshrined in the Constitution, so nobody can change that unless you have a constitutional amendment, which in the U.S. is basically impossible now since we're such a divided country. But for Congress, they could delay it, but they'd have to make them earlier, or they'd have to do a constitutional amendment to extend the terms of the sitting congressman to the new date of the elections, which they did in like 1798 when they changed everything up on that. But that would be impossible now. Nobody would allow that because you got to get 3/4 of the nation to agree. It's not going to happen. So there's a lot of confusion about it, but it comes down to president's date is absolutely fixed no matter what, and he can't stay 1 second longer. He's just not the president anymore. And Congress can move their dates around, but it can only be earlier. Can't be later. Right, exactly, Space Cat. And I tell a lot of people in Canada do that, because the government here can change the elections whenever they want. The opposition can get together and force the government out of power if they want. Or the government can just say we're not having elections until later, and then even after their 5-year term here, there's still some wiggle waggle which they can delay the elections further if needed.
Awesome. Let's go. I just saw that big old thing on Nathan Christie on our thing here.
I don't have anything about Nathan Christie.
I just posted something on the actual saying he's been watching us for a while and was like kind of shocked that we're not all huge. So I don't know if that's just a planned response or if this is an actual real person. But I think it's just interesting. So let's jump back here real quick. So we saw the market kind of go up here on Sunday. We saw it go up, and then today it came down on crude oil. Now, if you look at it, we have this area here where we're acting as resistance here.
Sorry, Pedro. I thought you were done with crude oil. That's why I went on about what I was talking about.
That's all right. Well, we can go into crude oil tomorrow, because we're almost at our closing period here. We pretty much went through everything except for now. Let's go over Ethereum and a couple of the ones that I've been looking at. So we talked about Ethereum, seeing it go up here from the level down here. Back in May, I said I expect to see crude oil, well, not crude oil, excuse me, get Ethereum get all the way up to that 29, potentially 3,000 area. We saw it get up to the 28 area. Now we're seeing it come down. Now, I am a Ethereum buyer. I think Ethereum is not going away. They're restructuring a lot of their stuff and their business, and I think they're going to really start to make things. So as we start to see a sell-off of Ethereum here, okay, I want to pick some up again at that 1,500 to 1,400 area. And also you have a liquidity area sitting at the 50 period moving average, as well as the 2,400 area here. So be ready for a bounce. If you're looking to pick up a day trade, this area of 2319 on Ethereum is a really good area here that I'm looking to capture. Right from here, see it kind of come down and see it pick back up. So one of those things I think is really important. Also, DOT. I've talked about DOT, and I have talked about a few of these other plays here that are they're fundamental to crypto. And I think even if if everything else kind of goes away, Chainlink is going to stick around. Again, it's fundamental to the blockchain. DOT is another blockchain that is fundamental to the blockchains at large and what they're doing. So I'm looking to see another sell-off on DOT as well as Chainlink as we're coming down. Again, I'm trying to stick to that 2 o'clock period here, so we can honor that. And so that's why I'm saying I expect it to kind of come back down to that $2 area. If not, a good little area that you could play off of, area that I would expect to see a major turn, is this area. This would be a liquidity play here where I'd expect to see a good little bounce at this level here, and that would be the daily. So expect us to come down here at this level and to see it pick back up. Now this is going to be a this is a monthly low. This is a monthly low and a weekly low, so we should see a fairly good bounce off of this low as it comes down into it, seeing it bounce back up and then to continue down. So that's something that I'm expecting to see here. That's a play there. Also, let's check out one of my faves here is H&T. H&T coming down to this area here that I expected. This is going to be that 218 area here. H&T is playing exactly how we're kind of been playing it. It's been traveling off of that 8 period moving average, so you looking to short it down into that 217 where it's racing towards the liquidity here. So I would expect to see it really play off of this, come back up, and then see it continue down as well to that $1.50 area before we see the next alt run really pick up. Again, I've talked about the alt run over the next 3 months to 6 months happening. Again, this is going to be inverse of the market until we see it correlate again. So I expect to see the stock market sell off, a lot of these other markets sell off, when then we'll see the money funnel into crypto and we'll see all the altcoins explode, and then we are selling. We're not holding it. We are going out, and it's all explained. Here, we're at the end of the market here. It's at the end of the year. We're looking to sell this. And then again, we may not catch the high, but we're going to get a vast portion of this, so that you guys can put that money into the bank and then diversify into the rest of the market, the S&P 500, buying gold, buying crude oil, buying things that are going to be assets as we see more inflation come into this world. Okay, so that's it in a nutshell. I wanted to go over a couple of the other ones that I've really been looking at, but we can do that tomorrow.
There's always tomorrow, Pedro, when you're a daily talk show.
Yes.
Good information today, ladies. And gents. And those of you in between, I know. But a good show as always here. Like I always say, there's the market indicators teach you a lot of things and get you to speak. Like behind the scenes while he's talking, I had to grok a few things. I couldn't remember. We've spoken about yields before. I'm like, when is it high yields a good thing? Oh, when you want to tame inflation, when you blah, blah, blah. There's a bunch of good things to do. Anyway, good show today. Thank you, Pedro, for putting in the work and the effort on these technical Tuesdays.
Yeah. Well, I really like it because then it allows...
Is that too loud in your ear?
No, that's actually good. So the thing I like about this more than anything is that it kind of gives people a good understanding of how everything works. A lot of times you'll watch shows and they'll talk about all these things, but they don't show you on the chart and how they related. And so people get confused of what's actually happening, like how bonds and yields play with each other and how they're like, childhood friends. They kind of go back and forth. So watching how it plays between each other is really fun, right? And then watching how gold plays with, Bitcoin and how we can see that interlay play. So it's been getting fun to watch and showing you and teaching you guys. So.
And it's been fun watching Bitcoin tank today. It's reached a little plateau there.
Oh yeah.
And I wanted it to come back down, but it looks like it's finding a little area of reversal.
The 50 period moving average is what it's holding on to. So we talked about, that's why I said bring down your stop to where I was talking about, because I expected to see a bounce off that 50 period moving average.
On the daily chart?
Mm-hmm. Yeah, on the daily chart. Remember I brought it up. I said it could be two areas that we could see step in. One being this area here down at that one, that the $1,000.
Sorry, I don't have your chart up right now. All
right. Well, I just said it was the 50 period moving average. If we were to continue, it'd come down to the 102 area, which was, I talked about the $1,000 sell-off, right? Or it could find a placeholder at that 50 period moving average on the daily chart. And then from there, you could play in conjunction with that. And so that's why I said, and just in case if we don't continue down, to make sure that you lock in profit, right? That's going to be this area. I said, I told everybody to make sure that they put on the 50-minute chart, this area right here. This was the stop. So our stop would sit about right here, which was gonna be like that 406 area. But you still, if you've been short all today, you were still sitting really pretty, right?
Anyway, Pedro, it's time to wrap it up here. Ladies and gentlemen, thanks for watching today. We really appreciate it. We had a really good crowd on for once on Twitch. We had 4 people at one time watching us on Twitch. So I think that might be a record for us. But we had at one point had 20 here on Rumble. So thank you very much to all of you Rumblers for watching, tuning in, doing all the things that you need to do, and sharing it. YouTube, you guys just suck ass. For now, we'll go see do some research on why the algorithm is pumping us on Rumble and tanking us on YouTube. I mean, it's not like we're controversial here. I mean, there's shows with fire and brimstone out there all the time that are getting millions of views. Anyway, you mentioned someone else posted saying that we guys should be a big time show. You're right, everybody. We should be a big time. So share this link, share it, talk in your trading groups about it, talk at your neighborhood barbecues. Hey, have you seen Pedro and Striking? Oh my God, you're missing out. Anyway, ladies and gentlemen, that's all we got for you today. My name is Tom, otherwise known as Striking here. The man in the box next to me is Pedro Garcia, the crypto chart analyst. We'll be back here tomorrow for Wednesday, talking about the markets, talking about crypto, and maybe even some meme coins if we can find one that hasn't been screwed by Pump Fun losing its Twitter account. So we'll see you tomorrow. So be there.
Oh, we forgot to go over that.